What's up, guys? James here. I'm going to do a quick trading recap for you. The day is Tuesday, December 1st. The trade was a company called Blackberry. I know you haven't heard them in a while. So they have been a company that has really been out of whack for a hot minute. They took their demise probably 10 or 15 years ago when iPhone hit the market. Since then, a whole lot has been going on until December 1st, when they announced that they had a deal with Amazon to do some tech, something to do with vehicles. I don't know if it was electric vehicles or not, but it was a pretty, everyone thought it was electric vehicles when this thing started kicking off, because as you can see, the price action was serious. So this one was alerted in a high of day scanner. We have one of our scanners that go on continuously, is a high of day scanner, just scanning the entire stock market to see which stocks are breaking new highs. This was one of them. Started watching the stock around 8 o'clock as it started hitting all the high days, and we watched it climb all the way to a cool 880 area. So the high of day became 880. Now, as you guys know, or 883, I think it was, something like that. So as you guys know, that becomes the new line to watch, the high of day. It dips into the market open, as you see right here. It dips into the market open. So now we're looking for, this is a setup for a pattern called a dip and rip. That's what I'm watching, is a pattern called a dip and rip. What you are watching for is for the stock to dip in price into the open and then climb past the high of day, which is that 880 mark. That's your entry point, with your risk being on VWAP generally, or a more shallow one if you want to watch your risk a little bit more. This one dipped into market open, and then it faked it. It'll fake out in the first 3 minutes, and these first 3 minute fake outs are very, very, very common. That's why the vast majority of the time I don't trade before 9:45. If I do, usually it's a stock where it's a very, very clear entry, not a whole lot of hype, something like that. In this case, there was a great deal of hype, so I knew the stock price was going to be all over the place. I didn't mess with it until, I didn't even look to have my finger on a buy button until well past this hype. So this dip in the first 5 minutes or so of the market open, it got a little bit crazy. And then continue to dip below VWAP. So now it's not looking like my entry point that I wanted to see was even going to happen. So at 9:50, I continued to watch it on as it continued to climb throughout the day. I'm watching. And then as it breaks this VWAP area here, it really started to move. And that's when I really started to watch it. After this dip, an immediate candle breaking a new high there, and then green candle. I bought in the 60s area, right around here. My purchase point was in the 60s. So let me put an arrow on that. What I might have done wrong is purchase before it broke that high day. It ended up working out for me, but it doesn't always do that, so you have to be careful. So right around the 860 area was where I bought in. Now this continued to rise nicely for me past the high of day. When it did, it kind of exploded out of that high of day because everyone's watching it at that point. I sold around 9:13, just before that nice big red candle. I thought I was very, very proud of myself. I thought I had gotten every single bit of that climb, and I did, of that climb. It dipped down back below the high of day, or which now is no longer the high of day, of course, but then it did a steady rise, and the high of the day ended up being 969. As you can see at the top of the screen, the market's open. Blackberry's trading today, which is the following day, down in the low. It's been all over the place in the sevens and low eights in pre-market up to now. So it never recovered that 969 high. That was my chunk. Again, that's what you're watching for on these, is for it to dip near or at open and then rise back past the high of day. That's your entry point, and you hang on to it as long as you're comfortable, and of course sell for your profit whenever you want it. I would be cautious. The lesson of this one is this fake out right here. This, as it dips, just like a textbook dip and rip move in market open, it popped back up very near. I think it went. Yeah, the best price was 880. If somebody bit that, then they would be bag holding for most of the day or taking a loss. So the lesson is don't trade in the first 5-10 minutes of open, especially on a stock that is super hype. You just cannot predict those price movements, and those dips and those price actions are just very unpredictable and chaotic at those times. So that's it for that one, guys. Like, subscribe, and there'll be more market recap videos to come. Thanks.